Hello, in this video I'm gonna walk you through the financial model Excel template. I will show you the main inputs, the core outputs, reports and charts. So let's get started. On the dashboard you can input your core assumptions or drivers for the model, see the core financials and core the charts related to the model. So let's begin from the launch date. When you are going to launch your business, let's imagine this is April 20. The next step is to input your marketing budget and visitors. So you have two options, marketing budget online and marketing budget offline. If you have only offline marketing, so you can just clean online section. If you have only offline, you can clean offline section. As you may see, all the charts are updated immediately. So if you have both, you can just adjust these assumptions and have real calculation related to your business. So let me show you how it works. So let's pretend in 2020 you have $15,000 per month of marketing and it will grow for additional $2,000 per month year over year. You have also notes, what you are going to input here and what you're supposed to input here. So it will help you to understand the nature of information of this assumption. So next step is the cost per visit online. It can be, for example, $5 and it will grow for $1 each year. The same way you can input your offline marketing assumptions and as a result you have total visitors by years. The next step is to set up your conversion rates or funnel metrics. The first funnel stage is to convert visitor to sales opportunity. So for example, we have 10% in this case and it can grow for 2% per year. So how it works, you have total visitors in 2020, roughly 29,500. 10% conversion rate means that sales opportunities you will have just 10% of total visitors, which is 2,900 opportunities. The next step is to convert sales opportunities to engaged opportunities, and you can adjust this by using this ratio, sales opportunities to engaged opportunities. Let's pretend that 2020 it will be 50% and it will grow for 3% each year. So we have 2,900 of sales opportunities multiplied by 50% and total amount of engaged opportunities in 2020 1,400. And the final step is to convert your engaged opportunities to new deals or new customers. Let's pretend this is 20% and it can grow for 5% each year. So for year 2020 you have 294 new deals, which is 20% of engaged opportunities. Hope that makes sense. So the next step is to set up your offerings and allocation by offerings. You have 3 offerings names here and you can adjust them as needed. For example, I can say that instead of enterprise to the pro and base medium I would like to save. You can also adjust these offering names. First of all, you need to set up allocation between these offerings. For example, in this case base is 25%, medium is 30% and pro is everything 100% minus 25 minus 30%. If you don't need pro, you can set up for the base 70% for example, and for the medium 30%, and you will have 0 for pro. If you need just base, you can set up for example for the base 100% and here you may input 0. So in this case you will have only base offering. If you input something wrong, for example 100% here and 10% here, in total this is already 110%, and for the calculation of pro this is minus 10%, which is wrong. It will show you the red color, means that something is wrong here. So let's back the assumptions. The next assumption you need to input, this is a breakdown of base, medium and pro by monthly and annual payment cycle. This is also changeable by years. If you don't need monthly, you can just clean it. You will have only annual payment cycle. If you don't need annual, you can input 100% for monthly and you have only monthly. If you need both, you can just set up some assumptions: 30, 35, 40, 45, and 50. And you will have the allocation between the years of new deals or new customers. I hope that makes sense. The next step you need to input, this is seasonality. In this case, this is marketing seasonality. Means that your marketing expenses will be allocated across the months in some way. As we started our business in April 20, you may see that marketing expenses will start only in April of 20. So if you don't need any seasonality, you can just input 1 divided by 12. And you will have just equal amounts across all the months. You have also check here if you will input something wrong, and if the total of the breakdown for the seasonality is not equal to 100%, you will have red color here. And if everything is okay, this should be green and it should be 100%. Below you can see the totals of marketing expenses by months and by years. The next step is to input the pricing. You have the regular price for the customer pricing by offerings as the first place to set up. Again, this regular price you should input per month. So for example, monthly payment cycle will be $55 per month. For the annual payment cycle, $35 per month, which means that you have $36 discount. For example, if you want 40 for the annual payment cycle, your discount will be 27%. The same logic for medium and the same logic for pro. You are able also to use upsell percentage for the customers and some upsell extra in addition to regular price. If it's not needed, you can just zero out these amounts. For the calculation of account receivable, you have revenue delay. So how much months it will take to pay from the customer to you. If you don't need it, you can just put 0, and in this case account receivable will be 0, and you have options input from 0 to 12 months. You have also option to input one-time revenue per new customer, which is setup revenue. It can be adjusted 45, 50. If you don't need that, just put 0 and you will have 0 setup revenue for this offering for this payment cycle. Additionally, you have bookings price per contract, means that all the assumptions related to upsell, regular price are collected in terms of per contract value. So for the monthly contracts, if you have $55 and if you have 10 for the 5%, it will be 10 additional dollars. That means that $55 plus 5% multiplied by $10, you have 55.5 booking price per contract in average. For the annual payment cycle, it will be multiplied 40 by 12 plus additionally upsell percent multiplied by upsell extra. Means that, for example, 20% multiplied by $5. So you have 40 multiplied by 12 plus 20% multiplied by 5 multiplied by 12, which means it's $492. Hope that makes sense. Additionally, you are able to input transactional revenue by offerings, which means that some of your customers can do some transactions which can be priced with some amount. So you have transactions per active customer per month, which can be changed like 12, 14, 16, 18, 20, and price per one transaction, which can be, for example, $3, $3.5, $4, $4.5, and $5. On the SaaS Charts tab, you may see the main SaaS KPIs and metrics broken down by two sets of charts. On the left side, you can see the monthly amounts for the 2 years, and on the right side, the monthly amounts for 5 years. So on the top set of charts, you may see the MRR breakdown by 3 offerings. In this case, this is Enterprise, Medium, and Base. The next couple of charts will show you the MRR movement, which is new MRR, churn MRR by months, and as a result, on the yellow line, you may see the active MRR. On the next couple of charts, you will see the lifetime in months of the Base, Medium, and Enterprise customers. The next couple of charts will show you the lifetime value broken down by offerings. The next chart will show you the customer acquisition cost by months for the 2 years and for the 5 years. The magic number broken down by base, medium and enterprise and for the total customers. The magic number shows you the efficiency of using marketing expenses in terms of the acquisition of new booking. Average recurring revenue per customer is total and broken down by offerings. New visitors and new customers, which shows you the efficiency of your SaaS funnel conversion rates. The MRR growth, which show you the new MRR in dollars and month-over-month growth of MRR. The SaaS quick ratio, which shows you the ratio between new MRR divided by churned MRR. And one of the important SaaS KPIs, LTV to CAC ratio, it should be also always more than 1. In this case it is minimum, I would say this is 20 in this case, so business works very good in this case. Yeah, that's it for this tab. For the customers charts tab, you may see the main customer metrics broken down by 2 sets of charts. On the left side you can see the customer metrics for the 2 years broken down by months. On the right side you can see the customer metrics for the 5 years broken down by months. So on the top you may see the customer breakdown by 3 offerings, which is base, medium and enterprise in this case. The next set of charts will show you the breakdown of active customers by payment cycles, which is annual and monthly payment cycle. And on the third chart of this tab you may see the customer movement. It shows you the new customers as the blue columns, churn customers as an orange, and as a result the active customers for each particular month. On the financial charts tab you may see 2 sets of charts with main financial KPIs. On the left side you may see 2 years broken down by months, and on the right side you may see the 5 years broken down by months as well. So on the top pair of chart you may see the EBIT by months. The next couple of charts will show you the EBITDA with comparison to revenue and cost of services sold by months. The next chart will show you the operating cash flow broken down by cash inflow and cash outflow. Then cumulative cash balance. On the next chart you can see the productivity KPIs, which is average revenue per FTE and average OPEX per FTE by months. The next chart will show you the revenue breakdown, which is breakdown of the revenue by 3 offerings and main payment cycles, which is annual and monthly, and additionally advertisement revenue. On the next set of charts you may see the revenue breakdown by recurring revenue and one-time revenue, which is setup revenue. And on the final set of charts on this tab you may see the monthly costs by P&L categories, which includes cost of services sold, salaries and wages, variable expenses and fixed expenses. On the income statement tab you may see the main line items of your profit and loss, which is total revenue, total cost of services sold, gross margin, salaries and taxes and payroll taxes, variable expenses, fixed expenses, EBITDA, total depreciation and amortization, EBIT, interest expense, net profit before tax, tax expense, and as a result net profit after tax. Please note that by clicking on this plus button you can unhide each of the category and see digitalization, for example for the fixed expenses or variable expenses, and for any other category. You may see the values by months and all the breakdown by line items. On the cash flow tab you may see the cash flow broken down by operating activities, financing activities and investing activities. Cash flow indirect shows you the same operating activities, investing activities and financing activities bar, but in more collapsed form, so it's more easy to see the values by months and more easy to read the numbers. On the balance sheet, you may see the breakdown of your balance sheet by current assets, which is cash and accounts receivable, non-current assets, which is fixed assets, current liabilities, non-current liabilities, and your equity. The summary of these three statements you may see on the financial statement summary, which will show you the annual numbers for income statement, cash flow, and balance sheet. And using this selector, you may select specific year to see this year by months. So on the top you have the main income statement line items and the charts, which will show you this information by years and by months. Then the balance sheet KPIs and charts, and the cash flow statement, charts, and the absolute values. On the KPI tab, you may see the main benchmark KPIs for the SaaS industry, which is LTV to CAC, churn rate, month-over-month net MRR growth percentage, gross margin, and EBITDA percentage. You may set the industry-specific KPIs which works for your country or for your region. For example, the EBITDA percentage can be 30%, for example. So you may see on this chart that EBITDA percentage now is 30%. All the values calculated by the model using the assumptions you input. You may see in here the values by years, and the same information you may see on the charts, which is LTV to CAC, churn ratio, month-over-month MRR growth, gross margin, and EBITDA. On each chart, the orange column, this is industry-specific benchmark, and blue column, this is a value calculated by the model. So using this table, you can easily compare where are you in terms of the industry-specific benchmarks and how is your business works in comparison to other businesses. On the burn tab, you can find the calculation of cash burn ratio, which consists of average burn amount across the year, average annual cash balance, and calculation of cash burn ratio. On the charts above, you can also see the cash burn ratio by years. On the top revenue tab, you may see the breakdown of your revenue by three main offerings, plus additionally the breakdown by monthly and annual contracts for all three offerings. Additionally, you can see the breakdown by years of absolute values and the breakdown by years of percentage allocation. On the revenue summary charts, you can see the same information on the graphical form, which is the percentage breakdown and absolute values breakdown. On the next set of charts, you may see the revenue depth and monthly run rate for the selected year, which you may change here. For example, 2021. On the first chart, you may see the absolute values, and on the pie chart, you can see the percentage allocation of these revenue streams. On the revenue bridge, you may find the factors or drivers of revenue growth between first year and the last year, which are also changeable. So you may set, for example, 2021 to 2024. You may see on the left side of the chart total revenue for 2021, on the right side total revenue for 2024, and the factors or drivers of revenue growth broken down by all 6 revenue streams. On the top expenses tab, you may find the breakdown of top 4 expenses categories and all other expenses collapsed into other category. You may see the breakdown of absolute values broken down by years with the total below, and also to the right you may see the percentage breakdown of these expenses. The same information you may see on the charts below, which you may find the percentage breakdown and the absolute values breakdown. On the couple of charts below you may find expenses depth and monthly run rate for selected year. You are able to change this year, and you may see the absolute values and percentage breakdown on the pie chart. On the expenses bridge, you may find the main drivers of expenses growth between these 2 years. These years are also changeable, so you may select the first year and you may select the last year. And you may see that total expenses started in 2020 will change to total expenses in 2024 by this waterfall. On the break-even tab, you may find the calculation of revenue break-even level and break-even chart. For this particular use case, you may find that your revenue break-even level is less than actual revenue calculation. This means that company is profitable. On the Valuation tab, you may see the calculation of company valuation based on the cost of equity, which you may input here, cost of loans you previously inputted on the dashboard, calculation of resource share you may see here, there's also tax rate, and here you may find the weighted average cost of capital. In the valuation model, there is two valuation methods, which is EBITDA multiple and revenue multiple. You may select one of them, and below you may input multiple of methods. Based on this information, we can see terminal value, which is calculated on unlevered free cash flow. You may see the present value of unlevered free cash flow, NPV, and multiplicator valuation for this particular company. On the DCF tab, you may see on the top unlevered free cash flow calculation in $1,000. As a result, you may see the unlevered free cash flow. And on the bottom, you may see the scenario analysis for your total enterprise value. The first scenario factor is discount rate or weighted average cost of capital, which is 12, 14, and 16. These cells are also changeable. And the second factor for the first scenario analysis is EBITDA multiplicator. So you can use this multiplicator as an assumption as well. So you may change it to 8%, for example, and you may see the different values for your enterprise value. The second one is terminal perpetuity growth rate, which can be changed as well, for example 5%, and you may see below all the enterprise values scenarios. The negotiation table, you may see the calculation of investment round and negotiation round, up to 3 rounds for each. So on the top you may see the assumptions. First is a year of valuation or exit. By default this is 5 years. You can change it to another value, for example 4 or 6 years. You can see the calculation of forecast annual free cash flow and multiplicator based on the Valuation tab. Here is the calculation of valuation in future value, also based on the Valuation tab. Then we have the assumptions and calculations for 3 investment rounds. The first one is months of investment. You can say month number 2, for example. Investor required IRR, for example 45%. Amount of investment $900,000. Duration of investment, which is 5 years minus 2 months, which is 58 months. Here is a calculation of required future value for investor and the shares, cumulative investor share and cumulative founder share, based on these assumptions. In terms of negotiation round, you can input individual investor share as an assumption, for example 1.5, and you may see the calculation of future value for investor and individual investor ROI and individual investors IRR. The color coding in the model is very simple. You may change any yellow cell in any yellow sheet within the model. This means that this yellow cell has some input, assumption or driver which impacts the calculation within the model. Blue sheets means that on these sheets there are some charts, reports and other information which can be useful for reporting purposes. On the tabs without color, you have some extra calculations related to revenue, to debts, equity, inventory, and everything which is needed for the reporting. Additionally, you have Contents tab, which allow you to navigate across the model very simple. So you may click on any report and you can go back. It is broken down by reports, assumptions, statements, and setup. There is short explanation about what each tab does, but if you want to know more, you can go to How To and to see more detailed explanation of what each tab does and what inputs you may find on this sheet and what kind of outputs you may find on this sheet as well. Any header of this section is also clickable, so you may click on, for example, Book Assets, and you go directly to this tab. On the Customer Movement tab, you can input customer churn assumptions and customer movement assumptions. So let's start from churn rates. So in here you can input your churn rates broken down by payment cycles and broken down by offerings. Please note that you input monthly churn. So for monthly payment cycle, if you input 5%, this will be 5% per month. But if you input 5% for annual payment cycle, it will convert to the annual churn, which is 45.96% of churn. So the same way you can input for medium and pro, also broken down by years and broken down by monthly payment cycle and annual payment cycle. And additionally, you have customer movement setup, which work in the next way. So each month you can convert from base to medium 5% of customers, or from medium to pro 10% of customers. If you don't need that customer movement, you can just clean this table and you will not have any migration between plans. If you need to save these plans, you can just adjust these numbers 1%, 2%, 3%, 4%, whatever statistic you have about your business, and that will work. Additionally, on the bottom you have customer movement chart, which will show you the new customers, churn customers, and active customers based on churn rates, customer movement rates, and visitors and funnel metrics which you set up previously on the dashboard. In the Cost of Services Sold tab, you can input up to 5 line items with the calculation of cost of services sold. So here you have 5 placeholders. Let's say for the placeholder 1 it can be hosting cost. Also you have up to 5 different categories of how you would like to forecast your cost of services sold. First 2 line items is reserved for the calculation as a percentage of total revenue, another one as a percentage of subscription revenue, one more as a percentage of transactional revenue, and the last one is used for the calculation of cost of services sold as a percentage of setup revenue. So let me show you how it works. On the top you have the basis of calculation, which is total revenue, and the breakdown: subscription revenue, transactional revenue, and setup revenue. So we just set up hosting cost and we chosen the basis as a percentage of total revenue. So by years we can input this amount, like 10%, 12, 13, 14, and 15. So below you may see the calculation of these line items by months. Finally, in Income Statement tab, under Total Costs section, you may find all the 5 line items and the amounts by months. On the Wages tab, you can input your headcount by categories, with hire and fire date, with annual salary, with ability to input different number of employees by years, with annual salary rise percentage, with monthly bonus and tax rate. Let me give you a couple of examples. Let it be CFO, which you are going to hire in March 20. You are not going to fire him, so the fire date will be December 24. So annual salary can be $50,000, and this will be one CFO over the time. So you may see one CFO, which is one headcount, starting from March till the end of the model, which is December 24. Also you can input 5% of salary growth rate. You may see the amounts by years connected to this annual salary and impacted by annual salary rise. Let's set up 10% monthly bonus and 5% of tax rate. So you may see below the calculation of salary broken down by months, monthly bonus, which is 10%, and 5% of monthly taxes related to the payroll. Another option would be admin account, which will start in April, which will grow till the end of the model with annual salary of $30,000. Let it be in year number 1, 2, then 4, 6, 8, and 10 headcounts. 3% of annual salary grows, 5% of monthly bonus, and 5% of payroll tax rate. So in here you may see total staff numbers, which is 2 for the year number 1, 2020. Starting from year 2021 you have 4, then 6, 8, and 10 in the last year of the model. Again, calculation of salaries for these two, in this case 4 headcounts, calculation of bonuses, and calculation of monthly base taxes. You may see in income statement total salaries and wages, and here you may see the total amount of bonuses, payroll taxes, and wages for these headcounts. On the variable expenses tab, you can input up to 15 line items of your variable expenses. So please note that you can input only in yellow cells, so first 14 cells are changeable and the last one is already predefined, which is customer acquisition cost, which you input previously in the dashboard. So for this customer acquisition cost you have amounts without any need to input any assumptions. All other categories are broken down by 3 categories: as a percentage of total revenue basis, as dollars per active customer, and as dollars per new customer. So on the top you have 3 bases for the calculation of variable expenses categories: total revenue amount, active customers, and new customers, broken down by months. So now you can input the names of categories, for example utilities. So you can input a percentage of revenue, 2%, 3, 4, 5, 5.5 by years. Below you may see the calculation of this line item by months, and additionally in the same way you can input your variable expense as a dollar per active customer, 5, 4, 6, 7, 8, and as a dollar per new customer, 1, 2, 3, 4, 5. You have also notes for each of the type for these variable expenses with some explanation of what you are supposed to input in this cell. And as a summary, in income statement you may find a section of variable expenses, and you may see all the detailization of variable expenses line items and the detailization by months. On the fixed expenses tab, you may input up to 15 line items for your fixed expenses. Let me show you how it works. For example, we have utilities. You will start pay starting from March 20 till the end of the model, which is December 24. You may see it here. Let's pretend periodicity will be daily with amount of $50 per day. So you may see these amounts in here. It is calculated based on count of days within this month. So obviously in March 20 you have 31 days. That's why you will have 1550. In April you have 30 days. This means this will be $1500. Also you have ability to input some growth rate year over year. Once you input this growth rate, you will see that your utilities will grow over year. Let me give you a couple of other expenses types. For example, advertising. Let it start in March and finish in August 24. This will be on weekly basis with amount of $100 without any growth. So starting from March till August 24, you have $400 per month, which is 4 weekly payments each month. And that's it. Another option is bi-weekly, for example, $500. You can start from July, for example, and you will have 2 payments, which is 2 bi-weekly payments within the month. $500 multiplied by 2, you have $1,000 per month. Again, you can input some growth rate, and you will see that your advertising expenses will grow year over year till the August 24, which is the last date of this expense type. Another option, office setup, which can be one-time payment, which will happen in February 20 with amount of $5,000. Obviously, you should not input any growth rates because this is just one-time fee, and you may see that office setup will happen in February 20 with this amount. Another option, insurance, let it be start from January 20 till the end of the model, and it can happen monthly with $1,000 per month, with 5% of growth first year, 3% of growth second year, 2% of growth third, and 1% year number 4. So you may see this calculation here. Starting from January 21, it will grow for 5%, which is $50. And starting from January 22, it will grow for 3%, which is additionally $32. Another option, quarterly. You may see that insurance will be paid $1,000 each quarter. You can start it, for example, from February, and this will be shifted to 1 month forward. Another option, semi-annually. In this case, you will have insurance payments once per half a year, again with a percentage of growth. And the last option is annual payments or yearly payments. You'll pay one time per 12 months, starting from February till December 24. For each expense type, you can use growth rate, and the calculation you may see in here. Also, in income statement, you may find total fixed expenses group. If you will ungroup this section, you can see these amounts broken down by months and by fixed expenses line items. On the Assets tab, you may input up to 7 assets line items and change this accordingly. For example, for the line item number 1, office expenses, you can set up the launch date for this asset type, for example March 20. You can input useful time years, let's say it's 1 year, and the asset cost, for example $50,000. So you may see in the calculation below capital expenditure, which is in March 20. You may see the calculation of book depreciation for 1 year according to the useful time. If you set 2 years, for example, you will see that it will be amortized fully for February 22, which is 2 years from March 20. And you can see the closing net book value of this asset. Additionally, you can input up to 6 other assets line items. So in income statement, you may find the depreciation and amortization amount for each month. In the cash flow, you may see the fixed asset capital expenditure, and on the balance sheet you may see the total closed net book value for these assets. Also, on the top of the dashboard, we have debt assumptions. Let me show you how it works. So for each debt, we are able to select the debt type. There are 2 debt types in the model, which is annuity and usual. Annuity means that each monthly payment, which consists your debt repayment plus interest expenses, will be equal each month. In case if you will select usual, your main debt repayments will be equal parts and interest will be just interest on the debt's closing balance. Let me give you an example how it works. So you may input some amount of the debt, the launch date, term will be 60 months, and interest can be 5%. You may also input the grant, which is just simple amount, which is paid in some specific months, and that's it. No repayments, no terms in terms of interest. So all the calculations of the debts you may see on the Capital tab. Calculations for debt number 1, debt number 2, debt number 3, total debts with grants. These calculations impacts income statement, interest expenses, the cash flow, interest paid, debt drawdowns, debt repayments, and on the balance sheet you have the debt closing balance. In the cap table, you can input the main cap table assumptions for funding, angel, seed and Series A rounds, see some summary and calculations and reports. So let's begin from the founders information. On the top left side you can input up to 3 founders and up to 5 categories of employees. You can set the names. You can input here also common stock and common options. So you can input some amount, for example 500 of options for employee number 1. You're also able to input unissued employee stock options plan if it's needed. If it's not needed, you can keep it as 0 by default. So as a result, you may see the total outstanding stocks and options and the dilution across all these shareholders. The next step will show you the assumptions for angel round. So you can input employee stock options increase on pre-funding, for example 600. You can set date of close, which can be April 20, for example. You can set the pre-money valuation, which can be some amount, 500,000. You have up to 5 angel investor or investor groups. You can input some amounts of funding. Below you may see the calculation of shares prior to angel round, the average share price, the sum of angel investment and post-money valuation based on the pre-money valuation and equity round. Exactly the same structure for the seed round and for the Series A round. Below you may see some summary charts and tabs. So in here you can see the shareholders, which is founders, employees and new options pool broken down by shares and dilution. Additionally, you have angel investors on the next tab to the right, seed investors and Series A investors. Below you may see more detailed cap table calculation based on the names of founders, employees and angels. Again, you have common stock, common options, total outstanding, the dilution percentages across these shareholders. In the next step to the right you can see the angel investment amounts, count of shares and the dilution after angel round, seed round and Series A round. Additionally, you have options tab where you can see the capitalization table summary on the top. You can see the capitalization table new options, which is angel, seed and Series A. And you can input the capitalization for new issuance of options. For example, founder 1 can have in seed round another 600 options. Employee 1 can have in Series A some 300 options. As a summary, you have 3 reporting tabs which can be printed. This is cap table print, the detailization of funding, angel, seed and Series A round, more detailed angel cap table round, which is summary of cap table before angel, after angel, and the breakdown of investors by investor names, dilution, outstanding, and common percentage. The same structure has seed cap table, it has founder cap table, angel investment and seed investment detailization, and on the top you can see the summary of cap table, after angel and after seed funding. Also, on the top of the dashboard, you can set the corporate tax rate, which works for your country. For example, it can be 30%. And you may see the calculation of corporate tax in income statement in the line tax expense. On the cash flow, you may see the corporate tax paid. By default, this is December. And on the balance sheet, you may see the corporate tax payable by months. On the top of the dashboard, you have currency, denomination, and taxes setup. So currency inputs means that you can input all your drivers for the model using one currency. You have currency outputs. It can be the same as currency inputs, and it can be different from currency inputs. So let me give an example. When you input in United States dollars, you have euro as an output, and for this case you can set up currency exchange rate. This is 1.2, for example. In this case, you will have in the model all your inputs in United States dollars, all your outputs in euros, and there will be a conversion rate between currency inputs and currency outputs. Additionally, you have denomination, which means that you can denominate all your outputs on the reports. In this example, you have denomination is 1000, means that your outputs is denominated by 1000. You can select millions. You may see that now it is in $1 million. You can set also billions or without any denomination. Additionally, you have corporate tax setup. You can change this number and this will impact tax expenses in your income statement. I hope you enjoyed my video. Thanks for reviewing this. You can find more on my website finmodelslab.com, and we'll see you later in the next videos.